Well, there's certainly a lot of news flow for traders and investors to sink their teeth into. While granted we've got the S&P still not a million miles away from an all-time high and just really sort of moving sideways, if you look at the fixed income market, if you look at the US dollar, which of course is driving so many other markets, you know, it's up one day, down the next, and certainly up very hard the next day. And that's really what we saw last night. You know, people are not getting a very good read on how the Treasury market's going. One minute you've got Donald Trump talking down the US dollar, talking about the strength that we've been seeing and his disdain for that. At the same time, we get 8 out of 12 districts within the beige book showing pricing pressures coming through amid a tight labour market. We see headline inflation gravitating to 2.1% and looking like it might even take over core inflation, which is running at 2.2%. Really in tune with this big move that we've been seeing in inflationary forces in the likes of the UK, Europe, China, Japan to a lesser extent. And certainly we're seeing global inflation pressures creeping up while inflation expectations are also moving up at the same time. And the third thing, you've got Janet Yellen coming out with a very well telegraphed speech, but certainly, you know, the fact that she showed no real concerns about the US dollar in her speech and saying that, you know, she's concerned about having easy monetary policy in for too long, talking actually fairly optimistically about the US economy and potentially having 3 rate hikes as her central forecast for 2017 when a market had 2 rate hikes being penciled in. And you've got US dollar flows coming back in decent force, and dollar CAD had a really big move. What we've been seeing today in Asia though has been some dollar selling. We've got some very choppy trade. If you look at Aussie dollar, it's moved fairly sideways. It's trading in a reasonably big range, but we've had some big data today with the employment numbers coming out for December. 13,000 net jobs being created. We did see the unemployment rate tick up to 5.8%. That was largely a function of people coming back into the workforce. We saw the participation rate increasing, but we've seen Aussie dollar reclaim that 75 handle, and it looked like it wanted to roll over a little bit more coming through there as well. If we look at the equity markets, well, we've seen the Australian equity market really spike up this morning, largely led by CSL, one of the big healthcare stocks here. They came out with new guidance, and that stock had a really strong open, and that really pushed the healthcare sector up, and that's up 6% as I speak. We have seen a bit of selling coming back into the market. We've seen, obviously, as we saw that big move up in bond yields, we've seen good selling coming through in REITs, and we'd expect to see the similar situation play through in European markets with a higher fixed income open, and of course that's going to push down those higher dividend paying names and certainly those companies which pay very high distributions as well. So people want to be in fixed income as opposed to the equity market there. But we've seen material stocks fairly flat on the day here in Australia. The Japanese market's up a touch. That's probably one of the better performers on the day because dollar yen had that big surge on Yellen's comments, or the lack of concern, I suppose, about the dollar strength we've been seeing there. And that dollar strength has seen some traders looking to sell a little bit of precious metal exposure today. We've seen gold under a little bit of pressure, but certainly the choppiness we've been seeing in the US situation with Trump talking down the dollar, then we get a barrage of good news coming through in CPI and other areas. It's very difficult to read the US dollar at the moment, and of course that's very much at the centre of so many different trade thematics at the moment.